Namaste and welcome to part D of funds flow under simple solution series. We will be dealing with the illustration 14, and when we do this, as you are aware, we will be getting into preparation of three statements: statement of working capital, statement number 1, statement of funds from operations number 2, and funds flow statement number 3, and a combination of these three gives a solution to the problem, and we will also be preparing working notes. It is quite relevant to understand briefly about the norms used by us here. For example, anything which has got something to do with working capital, current assets and current liabilities, it will go into working capital statement. Anything which has got to do with depreciation, dividend, interest, writing off of miscellaneous expenses or goodwill, they all come to profit and loss account. Anything which has got movement of funds, it goes to funds flow statement. There are cases where an item may come both under statement number 1 and statement number 3, where it pertains to working capital and there is movement of funds, or it pertains to profit and loss adjustment account and there is movement of funds. For example, redemption of preference shares at a premium. Premium has to be provided here and it has to be paid from here. That way it oscillates between any of these three or a combination of these three in a pair of two. Now let's just understand. Fixed assets involves movement of funds, therefore it is funds flow statement. Investment involves movement of funds whenever we buy or sell, it goes to funds flow statement number 3. Current assets goes to working capital statement. Discount on debentures is nothing but miscellaneous expenses. It is basically a non-cash expense, therefore it will come under statement number 2. Equity capital, fund based, therefore 3. Preference capital, fund based, 3. Debentures, fund based, 3. Reserves is nothing but profit and loss account balance opening and closing, it will come to statement number 2. And provision for doubtful debts, though it pertains to current assets, since it is given separately outside current liabilities, we may have to prepare a separate adjustment account for it and route it through profit and loss adjustment account. That is statement number 2. Current liabilities goes to statement number 1. Coming to adjustments, machine costing 70,000. When it is sold, there is fund flow, therefore it goes to funds flow. There is a profit or loss on sale, it goes to profit and loss account, therefore it will appear in both statements. Preference shares redeemed. When you redeem, you pay out money and you pay premium. Premium will be accounted in statement number 2. Total payment will be accounted in funds flow statement. Dividend of 15%. When it is charged, it will be charged in profit and loss account, statement number 2. And when it is paid, it will appear in statement number 3. Provision for depreciation stood at 1,50,000. It is depreciation. Depreciation is a non-cash expense. It will come to statement number 2. Similarly, stock. Stock is a part of working capital. It will affect working capital statement. Second, stock appears as opening and closing in a profit and loss statement account. Any variation in stock affects the profits. Hence, it will also affect 1 and 2. This is a unique case. We have taken up this particular illustration more to understand the stock adjustment. In the initial review, we will revisit the points that we have already seen in the previous slide. Here, as a routine, we have got December 2014 as column number 1, 2015 as column number 2. Amount in absolute rupees throughout. In working note, there is discount on debentures, which we have seen as it will go for a write-off in profit and loss account. Then we have got provision for doubtful debts. Though it is pertaining to current assets, since it is a separate account given, we will prepare the ledger accounts and pass necessary entries in the profit and loss account. Redemption of preference shares at a premium. Premium will appear in profit and loss account and the final payment will be in the funds flow. dividend as we have seen, provision in profit and loss account, payment in funds flow, and writing up value of opening stock. It will be affecting both working capital as well as the profitability. Before we go ahead, I just want to tell you how opening stock impacts profit. This understanding will help you how we treat this particular item. Take a normal profit and loss account. We have sales, closing stock total is 400, opening stock is 90, purchases 100, expenses 50, and we have a profit of 160. What happens if opening stock increases? If opening stock increases from 90 to 100, the profit, which was earlier at 160, it falls. Means any change in the opening stock upwards for rectification of error for any other reason, it has the effect of bringing down the profits or bringing down funds from operations. We have to pass an entry in this case where stock which was valued at 90,000 is now being taken up at 1 lakh. We are increasing opening stock from 90,000 to 100,000, which will bring down funds from operations or profits. And the entry that we pass has to reduce funds from operations. We cannot pass entries on this side in a profit and loss adjustment account. The entry will come on the credit side so that the funds from operations automatically gets reduced. Let me tell you, if the funds from operations, in this case, say X, when I change this, it has to become X minus 10. Because I'm increasing stock from 90 to 100 and profit falls from 160 to 150. When I say X minus 10, I should pass an entry on the credit side to the extent of the difference between 90 and 100, which we will see in the respective slide. Now let's prepare the regular adjustment account. We have fixed assets 5,10,000, opening, closing 6,20,000. There is opening depreciation of 1,50,000 and opening depreciation, closing depreciation of 1,90,000. If we post 510 plus 150, 660, there is the gross fixed assets. 620 plus 190 is 810, and we have an entry, a machine costing 70,000 book value. Means it was a gross value. Costing 70,000 means gross value is 70, book value means WDV, and disposed for 25,000. We will take out sale of assets, gross book value 70,000. Difference comes to 2,20,000. This is the fixed assets purchased during the period. Now that is the missing value which we will be taking forward to funds flow. Then 70,000 has to go through sale of fixed assets account. It is a gross value opening. And what we do now is we have three items here now. One is it was disposed for 25,000 by bank, sale proceeds 25,000, and its return on value was 40 and it was sold for 25, means we made a loss of 15, that is loss on sale of fixed assets. And gross was 70, book value was 40, means 30 was depreciation on assets sold. Now here we will be proceeding further. Provision for depreciation account. We have to take this 30,000 to that account. Opening balance is 150, closing balance is 190. 30,000 is the sale depreciation on machines sold. Therefore, debit to profit and loss account during the year is 70,000. This is another missing item we will be getting. Similarly, we have one more ledger accounts to be prepared. Provision for doubtful debts, opening balance 10,000, closing balance 15,000, and difference between the two is nothing but charge made to profit and loss account, because the provision has increased from 10 to 15, means debit to profit and loss account during the year is 5,000. These three missing items, 2,20,000, 70,000 and 5,000, out of these two are debit to profit and loss account. This will go to funds flow. Now we are at preparation of statement number 1, calculation of changes in working capital. Current assets, opening balance 2,40,000, closing balance 3,75,000. We post it. And there is an adjustment. Stock which was valued at 90,000 was written up to its cost. Means opening stock has been raised by 10,000. Therefore, I have to raise the stock. Right? Stock value revised up 10,000 rupees. Under opening balance, it will be put here. Then we have got current liabilities 70,000 and 1,45,000. Effectively, current assets up by 2,50,000 to 3,75,000, means 125,000 is the outflow on current assets. Current liabilities, we have borrowed additionally 75,000. 125 was eaten up by current assets. We had an inflow of 75. Net we have got. Now the figures 50,000 is the difference, which is nothing but the increase in working capital, which is an outflow as known. Now let us get into preparation of statement of funds from operations. It is given as reserves, the opening balance of profit and loss account 1,10,000 and 2,70,000. We post it there. Then discount on debentures, it has been written off from 10,000 to 5,000. It is a non-cash expense. We post it here. Then premium on share redemption was carried out at a premium of 5%. If you look into preference share capital has reduced from 2 lakh to 1 lakh, means we have paid out 1 lakh. 5% on 1 lakh is 5,000 redemption premium. We will pay 1 lakh plus 5,000 under funds flow out as a redemption. Then dividend proposed is 15%. Normally 15%, unless they indicate it as pro rata with date-wise details, dividend is always calculated on the opening balance of 3 lakhs. It is 45,000. Payment will be made in funds flow. And here we have got one more transaction. Stock which was valued at 90,000 at cost was to be made 100,000, means there is an increase in stock. Simple rule is when the stock increases, profit comes down. When profit comes down, funds from operations also comes down. To bring down funds from operations, the entry has to be on the credit side. And 10,000, 90 to 100, to bring down profits, we post an entry here for 10,000. That is what we will be putting it on the credit side. To understand the principle, if stock increases, entry on the credit side. If the stock decreases, entry on the debit side, respectively, to ensure that funds from operations goes down in case of stock increase and goes up in case of stock decrease. This is the treatment of this item, which you need to clearly understand. And now we go to adjustment account. On loss on sale of fixed assets, we have made 15,000. That will be posted here. We have a depreciation of 70,000, which will be posted here. Provision for doubtful debts, 5,000 will be posted here. Now we have posted everything here. Now the total comes to 4,15,000, and the difference between 4,15,000 and 1,10,000 and 10,000 comes to 2,95,000. That is the funds from operations. Uh, to go back to the impact of this transaction, just understand it very clearly. If this transaction was not put here, our cash from operations would have been 3,05,000. Now 3,05,000 was not the right amount because stock was to be taken up from 90 to 100. By taking up opening stock, the funds have to come down. Therefore, to bring it down from 305 to 295, we put an entry on the credit side of the profit and loss account. Therefore, whenever the stock goes up, entry will come on the credit side. Whenever the stock comes down, entry will come on the debit side. Now let's get into preparation of funds flow statement. Using the change in working capital statement, funds outflow is 50,000, increase in working capital. From here, we go to statement number 2, profit and loss account. Funds from operations is 2,95,000, which we get posted here. Once these two are done, we go to the adjustment accounts to record the transactions. We purchased assets worth 2,20,000. Fixed assets, we record that. We sold machinery worth 25,000. Sale proceeds 25 received. And now we go to the problem proper. Fixed assets covered, investments covered. We have got investments of 30,000 going to 80,000, means we paid 50,000 extra to buy investments additionally. Then covered current assets, covered discount on debentures in profit and loss account. Now equity capital increased from 3 lakh to 3,50,000, means we received 50,000, we record it there. Preference share capital 2 lakh became 1 lakh, we paid out 1 lakh as redemption. We paid premium of 5%, means we paid out 1,05,000. These three transactions interlinked. Then debentures, 1 lakh was there, it became 2 lakhs, means we received funds of 1 lakh additionally. That takes care of it. And dividend we provided for 45,000. Now we are paying that dividend 45,000. With this, we have made the two 4,70,000, 4,70,000 funds flow, sources and applications matched with each other. Just to put the whole exercise in perspective, we started with the illustration 14, and the main focus was stock changes. We prepared working capital statements, profit and loss account statement, and we posted from working capital the application of 50,000. From profit and loss account, we posted the amount of 2,95,000 funds from operations, and we have the funds flow which sources and applications equaled professionally, and that is the solution with proper understanding of all norms. Congratulations. Thank you so much. Thanks a lot.